Gold and silver are going up a ton right now, and because of that, a lot of people think that they're smart investments. But I'm going to make the case in this video that gold and silver are actually bad investments, especially if you're in your 20s and you're trying to build a real long-term wealth. Now, I'm not saying gold and silver will crash. I'm not saying that you can't make money off of it in the short term or the medium term. But what I am saying is that if your goal is to grow your net worth, build financial freedom, and take advantage of compounding over the next 15, 20, 30 plus years, there are far better places to put your money. And I know that this video is going to upset some people, especially because gold and silver have been doing so well recently, but I want to break down the actual long-term math, the opportunity cost, and why I personally will never prioritize buying gold or silver as a serious investment. So do you own any gold or silver, or would you ever invest in it? Comment down below. I'm very curious to hear what people say. Now, jumping into the video here, one thing I have to acknowledge and own up to is their recent price action has been insane. Like over the past year, gold has been killing it and silver has been doing even better. I mean, year to date, gold and silver have done phenomenal. It looks like over the past year, gold is up around 90% and silver is up 265%. So I definitely have to acknowledge their performance the past year and a half have been phenomenal. There's no doubt about that. And some of the main reasons for this is because the dollar is losing value. There's a lot of geopolitical fears right now going on with trading as well as tariffs. And there's also a lot of economic uncertainty, which tends to push people towards precious metals like gold and silver. And there are a ton of influencers and financial channels that are talking about gold and silver. But in my opinion, short-term performance does not actually equal long-term wealth creation. My argument here is not about timing, it's about long-term returns. And one thing I want to be very clear about is I'm not hating on gold and silver. If you make 5x your money off of it and you sell it and you make a killing, good for you. Like, I'm happy for you. This is not a zero-sum game. But I really think that if somebody is serious about long-term investing, gold and silver is not the route that you want to go. So jumping into one of the main points I want to make is that gold and silver, they don't create wealth, they preserve wealth. They don't produce cash flow, they don't have a ton of growth or a ton of compounding. When you invest in something like stocks, that is an ownership in an actual business that grows profit. So if you buy a share of Microsoft or Apple or Amazon, that is a real business that is selling real services or real products that is making real money. If you own real estate and you have rental properties, you might be getting rental income. You also have some tax deductions you can utilize, as well as appreciation from the house going up in value. And then you could also own your own business where you're getting cash flow, or maybe you're getting equity growth from the value of the business going up over time. And when we look at gold and silver, there's no earnings, there's no dividends, and there's no compounding. You can only make money from gold or silver if somebody is willing to pay more for it later. It relies almost entirely on greater fool theory. And I also do need to acknowledge, though, that the argument for gold and silver is different. I do think silver has a little bit more value, but I'm going to jump into that a little bit later. The kind of key logic, though, that I'm not a big fan of when it comes to gold and silver is that you're not necessarily investing in growth. You're just betting on price, and you're betting on the price going up over time, compared to when you own like an ETF, like let's say the S&P 500 or maybe VTI, which is the total stock market index. That is a huge amount of companies already in a portfolio for you that are just growing very consistently over time. And as the economy grows, as the companies become more innovative, as the companies get bigger and bigger, the returns on that you will see. And so I did want to make that point. Now, actually jumping into historical gold returns, and then we'll talk about silver real quick. So in January of 2012, gold was priced around $1,700 an ounce. So let's pretend that you bought it then. Then you held it for 11 years until January of 2023. Over that 11-year period, you would have made 7% return. Not 7% a year, 7% in 11 years, which is an annualized return of around 0.6% a year. You didn't get any dividend income from that, so you didn't grow any type of a cash flow stream there. You just sat there and you got 0.6% a year, and you got 7% after 11 years. Now, one of the main reasons that gold is going up is because the US dollar is weakening. There's a pretty clear correlation between precious metals and the weakening US dollar. So one of the main reasons the dollar is weakening is due to policy shift signals, softer interest rate expectations, as well as global diversification. So in regards to recent political messaging, it seems that Trump is suggesting that he's not as focused on maintaining a strong dollar, which of course that's going to impact market sentiment. And then at the same time, the expectations right now is that the Fed is either going to pause rates or they're going to cut rates, which would then reduce the dollar's appeal to global investors. And on top of all this, central banks at a bunch of different countries are gradually diversifying away from the dollar. They're spreading their reserves across other currencies and assets. And then on top of that, we have ongoing trade tensions as well as geopolitical uncertainty. And this has made investors more cautious about holding assets that are closely tied to the US, especially as we see the dollar weaken as the world's primary safe haven. So that is one of the main reasons we're seeing the dollar go down in value, which then as a result is causing gold to go up in value. So that's a little bit about historical gold returns. Now let's talk about historical silver returns. If we go back to January of 2012, silver was priced around $33 an ounce. And if you bought it back then at $33 an ounce and you held it for even longer than gold, if you held it until February of 2025, you would have a break-even return. return. That is 13 years of absolutely fucking nothing. So right off the bat, I'm already thinking screw that, but I do not want to be biased. And one thing I have to admit is I do feel like silver has a lot more practical use than gold. Silver is actually used for a lot more things like solar panels, EVs, electronics, green energy. So I do think it has more industrial demand than gold. But silver can also go through really long periods of stagnation, which to me are just not worth it at all. For example, if you look at this visual here of silver in January of 1980, it was around $35 an ounce at its peak. And if you bought it then, you would have broken even in July of 2025. Yes, that is 45 years of zero growth. So in my mind, I'm thinking, hell no. Like, even if you bought it right now and you're like, oh, it's going to go up another 100%. What if it goes up another 100% and then it sits flat for 10, 15, 20 years? Is that still worth it to you? To me, it's not, but that's just my personal opinion. And I do want to reiterate that this is not professional financial advice. I'm not a financial advisor. This is just my opinion on all this. And over long periods, stocks massively outperform gold and silver. Like the S&P 500, that really compounds wealth, whereas gold and silver mainly are used to track inflation. Like I said earlier, stocks and the companies that are in either the S&P 500 or VTI, if you own an ETF that holds a ton of different companies, those ETFs benefit from the companies doing well. So that is through, innovation, productivity, growing technology. If they can grow their revenue, their profit, and their free cash flow, the stock price over time is going to reflect that. That is just basic intrinsic value. That is finance 101. And gold and silver's job, on the other hand, is typically to store value. It is not to multiply it. So if your goal is to get rich, gold and silver historically are just not the best tool for that. Money that you put into gold or silver, that is money that is not compounding elsewhere. Every dollar that you put into these precious metals is a dollar that is not being invested into ETFs or businesses, or maybe you're building your own skills that you could put money into. And when it comes to investing, and I'm constantly saying it on this channel, the younger that you are, the better, because a young investor's biggest advantage is time plus compounding. And gold and silver do not maximize either of these things. Over 20 to 40 years, missing stock market compounding, that is a massive thing that you do not want to miss out on. Gold and silver protect money while large index funds tend to multiply it. So like I've been saying a ton during this video, gold and silver are good for preserving wealth, not necessarily growing it. So who should be owning gold and silver? That's a good question to ask. I feel like if you already have a large nest egg and you're in your 50s or 60s and you already have, let's say, $1 million, $2 million, $4 million, whatever number it is that you're going to retire on, then to me, an older investor makes a lot more sense to own gold and silver. They can diversify, they can preserve their wealth. And I'm not saying to go throw all their money into it, but if it's 10, 15, 20% of a portfolio, I feel like that does make a lot more sense for somebody that's a lot older. But a younger investor should be prioritizing growth. In your 20s, like I said before, your biggest asset is your time. And the earlier you start, the better when it comes to investing. And I really do not want people to just throw a bunch of money into the hype that gold and silver are giving us right now, and then you see it sit flat for 10 years and you're like, shit, I could have invested that money elsewhere and made a lot more money. I genuinely feel like if you're 20, 25, 30 years old and you're buying gold and silver, you're playing defense way too early. Wait until you're a lot older where you already have a ton of wealth and you want to preserve it more. Then that makes a lot more sense to me. And there is also a ton of volatility that comes with gold and silver. Like gold can also stagnate for really long periods of time. So kind of like what I was talking about before with silver, with gold, if you bought it in January of 1980, it reached $850 an ounce, which was an all-time high then. And that was amid rising inflation and geopolitical tensions. Does that sound familiar to you? However, when the Fed under the leadership of Volcker increased interest rates to over 15% to combat inflation, gold plummeted. And by 1985, it was trading below $300 an ounce, which was a decline of nearly 65%. And the complete recovery to the previous peak took more than 25 years. So what I'm saying here is you do not want to be buying it, watch this thing drop 40, 50, 60%, and then wait 2 decades for this to bounce back. At least the nice thing when it comes to stocks like the S&P 500 or VTI, whatever you want to invest in, is that they typically tend to rebound a lot quicker, like within like 2 to 3 years, even if we have a really big crash. You can go look at the dot-com bubble and you'll see this same thing with the '08 crash. And some people may make the argument that, oh, well, what about the lost decade? But even then, after the lost decade, we had one of the best decades of all time for stocks. And I'm talking about the run that we saw from basically 2010 to 2020. And even then, when we saw the COVID crash, it rallied back very quickly, like within months. And so one thing you do need to consider is that there have been decades where gold and silver have just barely moved. And when these precious metals boom, it usually happens during fear, not growth. And I don't think we should sit around and just be fearful of the entire future of our economy. Although I get that it is not pretty right now, I do believe in the American economy long term, and I always will. It is very common for us to go through cycles of things going really well and then things struggling, and then we bounce back even bigger. And if the economy is growing, then businesses will definitely outperform precious metals. Now, one thing I do want to talk about in regards to more the psychology of all this is that there's a huge recency bias with gold and silver. People feel very smart owning them right now, and people tend to overweight recent performance. Like, think about it. A lot of people a couple years ago were talking about Bitcoin, and then Bitcoin crossed over 100K. At one point, point it got over 120,000, I think, dollars for one Bitcoin. And now it's dropped back down quite a bit. I'm not really hearing people talk about Bitcoin. Same thing with Nvidia stock. Remember when everybody was talking about Nvidia, or a couple years ago, Tesla stock? Nobody would shut up about these companies. And so you have to understand that people tend to overweight recent performance. Just because something has done good the past 6 months or the past year does not mean it will do good for the next decade. And so a lot of people think that when gold and silver go up in value, it feels like this really smart hedge that they've done. And I do feel like the media tries to amplify these hyped up cycles. In the psychology of all this happens all the time. Like I said, this happens with hot stocks, it happens with Bitcoin and crypto, it can even happen during housing booms with real estate. And if you're truly a smart investor, you are thinking in decades. You're not thinking in 1 to 2 year periods, you're thinking in 5, 10, 15, 20 plus year periods. Just because it's working now does not mean that it's going to be the best move long term. And one thing you should also understand is that silver could even be a worse long-term investment because it is more volatile than gold. It is a lot more tied to industrial cycles. So yes, it does have more use, but it also can tank if certain industrial cycles do bad. So the price tends to swing a lot harder with silver, and it does feel very speculative when it comes to owning these assets. Like I said, it kind of leans a lot on greater fool theory, meaning that you think somebody's just going to buy it for a higher price later. There's not necessarily a massive intrinsic value to these things, and that's why they're there for preserving wealth. So I do want to make it very clear though that I don't think gold and silver are bad assets. I just think it is a bad primary strategy. If you're putting all your money into gold and silver, I think you are making a very stupid decision long term. It can make sense as a small hedge or a small portfolio diversifier if you have it, 5% of your portfolio, maybe 10% tops, but it should not be the main growth engine of growing your wealth. I really just do not think that is the move. When people are treating gold and silver like it's a great wealth builder, I think that is where you tend to go wrong. And a lot of these people tend to be like doomsday, just huge doomers. They think the world's always going to go to shit. And like I said before, I'm very optimistic on the US economy long term. Sure, it could definitely have periods of underperformance, but I do think over 15, 20, 30 plus years, it's going to continue to rip. And so some better alternatives, I feel like for younger investors, like I've said 10 times in this video, is just putting your money into index funds, open up your Roth IRA, get your 401k match, put your money there. Like that is, in my opinion, a lot smarter thing. Again, not professional financial advice, just my 2 cents. I would even say putting money into skills that will help grow your income or grow your career. I think that is a better place to be putting your money. Or if you can put money into a side business or anything you can do to invest in yourself early on, that is where it's going to really compound over time. If you want real wealth in your 20s, you got to focus on growing your wealth, not just trying to hedge your wealth, because you don't have a big amount of wealth to hedge. It's not like you're sitting on millions of dollars. You're sitting on $5,000. You're trying to grow that to 100K. Then you're trying to get 100 to turn into 500 over time, and then 500K into multiple millions. And you want to do that with compounding assets that are consistent over a long period of time, not assets that just sit flat for 15, 20 plus years. That to me just seems like a huge waste of time. So for me, I am a lot more focused on compounding, cash flowing assets, and growth investments. And you even see that with my 3-fund portfolio that I do. I'd much rather own productive assets or even real estate over gold. I mean, to me, it seems like there are a lot better options than these two. And I'm really trying to just optimize for long-term upside. And so I already know I'm going to get a ton of comments that are going to say, oh, well, gold and silver protect against inflation. Oh, dude, you're an idiot. They're just absolutely ripping right now. They're going to keep going up and going up and going up. We'll see. I could be wrong for the next 3 months. I could be wrong for the next year, maybe even 2 years. But I do think over a 10, 15, 20 year period, gold and silver are just not the move for long-term compounding. I'd rather own something that produces value than something that people are panic buying just because it's going up. And so I'm not saying that gold and silver are horrible investments, but if you're young, you're trying to build wealth, I think they are one of the slowest ways to get there. And I feel like a lot of us want to grow as quickly as possible in a very smart and calculated way. So that is my take as to why I think gold and silver are very overhyped. I don't necessarily think they're a good long-term investment for people that are younger. Sure, if you want to throw 5, 10% of your portfolio at it, go for it. But I do not think you should be putting most of your money into this, especially if you want really good long-term returns and you want to avoid those flat periods. So that is it for me. I hope you guys enjoyed the video. If you did, drop a like down below, hit that subscribe button. I'll see you in the next one. Peace.